I think you're seeing two things. One, profit taking in the big stocks, in the big tech stocks, and you're seeing a rotation because there's nothing fundamentally wrong with the market. And I think what you're seeing, like I said, you're seeing some profit taking in the big ones. You're seeing Apple down over 2%. You're seeing Facebook down over 3%. You're seeing Netflix and all the rest of them all down. All the major tech companies are taking a hit, but mainly that's for profit taking. They've been having a good quarter. Profits are up, but it's time to sell. I saw Tim Cook sold 132 million shares of Apple for his personal account. Bezos sold stock over there in Amazon. So they're all just taking a profit this time of the year and looking at taxes also. This is the time they start looking at taxes. So basically, it's a rotation. If you look, they're going into airlines, they're going to cruise ships. It looks like there'll be a vaccine. Could be a vaccine in 100 days, which would be in pace with the airlines and the cruise ships for vacations come holiday season. So that's what I see going on right now. If you've been following the stocks, it's a good time to probably pick up some Apple. Those stocks are not going to go anywhere. They're going to be here for generations. So it would be a good time to look at Apple, look at some of the big tech stocks, look at Facebook, look at Netflix. Remember, even with a vaccine, I think people are changing the way they view things. And I think they're going to be home watching movies more than going out to movie theaters. I would definitely look at the tech sector. I love the tech sector. I think it's going to be strong and get stronger. It did millions of option trades on the call side. And anything can happen. They could sell them down, which I guess they're taking right now. They're taking some profits and selling them. Remember, you can buy billions of shares of calls or put options for a fraction of the price of a stock. So that's what goes on sometimes, and that's apparently what happened with SoftBank. There was a rumor that we were doing that. A major player out of Japan was doing that, and apparently it was SoftBank. But again, it's just a technical thing going on, and they're rotating. They'll be getting in something, they're taking a profit. It's good for them. I don't blame them. Like I said, I saw Tim Cook take a profit earlier and some of the other big wigs at these tech companies. Nothing wrong with taking profits. That's how you make money, So sure, it makes sense. Techs are such a heavy weight. That's, I think, why. I think if it was a normal day, you'd see the market be up maybe 200, 300 points. Labor market number was very strong, was very good, especially considering you're in a pandemic. Came in, I think we had 1.37. And that was better than they were looking for 1.32, I think, or 3.4. So it was better than expected. And then what else? The unemployment rate fell to 8.4% from 10.2% last month. So overall, it was a very strong number considering we're in a pandemic. And the way this goes, if we keep building on that, you could see by January we'll be almost back to where we were. So it's a strong number, and you're coming into the holiday season when unemployment normally picks up with part-timers and things like that. So we could see that. Now there may be a rotation out of tech being the leader. I still like tech, but there are other cyclicals that you could definitely get in. Travel and leisure, I'd still be a little leery of getting into them, even though they acted very well yesterday. They're going on the assumption that, like I mentioned, within 100 days there'll be a vaccine, and then people run back to the airlines and the cruise ships. I don't think that personally. I think people will still be a little leery of getting a vaccine right away, and also I think people will be a little leery of jumping on a cruise ship or even getting on planes. But again, that'll be the holiday season. They may do that. I would look. I still like the techs, but no, I would look for other sectors. I think a lot of industrials look strong, and they've been underperforming. Could be a good time to get back into railroads, get back in autos and things of that nature. I think we could see a pop in them as Americans go back to work, as we're seeing here. When we don't save, we go out and buy. And I think you might see them buying autos. You may see them buying, traveling internally. So you may see them going on railroads to Florida or out west or something like that. So I think that's the kind of stocks I would look for. And with domestic-orientated stocks, or retail stocks also. I think Macy's will have a good quarter. I think some of these other stores will have a good quarter as, again, people start to shop again. We don't save, we shop. The banks could also finally get out of the doldrums and have I mean, they're not making any money on mortgages, but they could be writing a lot of mortgages because home prices have come down quite substantially, and mortgages are so cheap. I could see a lot of refis coming, and maybe a lot of home sales going up. We'll see home sales, I think, next week, so we'll take a look at those and see what they're doing. But I bet there'll be a lot of home sales. And again, we're in an election year, so I mean will have a lot of weight as we go closer to the election, as there appears to be a winner or loser before November 3rd. So we'll have to watch that. That could be tricky also. It's too early to kind of call it, although we always look at Vegas, where those guys are putting their money. They've been right, I think, the last 45 years or something like that, since World War II, basically, or Vietnam. And right now they're betting on Trump. So, I mean, that's where the real money is going. We'll have to wait and see, though. It's too early.